We're going to get started. For those of you I don't know, I'm Chris Marangi. I'm Co-CIO for Value at Gabelli, and I like stocks. I love stocks. And like many of you from Mac's poll earlier, I think would agree, one of the very interesting things about this conference is that there are at least 3 other terrific public companies in Omaha. And we're going to shift gears and talk to the leadership of each of those companies over the next 3 panels. And we're going to start here with Lindsay Corp. And we're very honored to have rejoining us this year the president and CEO, Randy Wood, who's been with the company since 2008.
Thank you.
And before that was with Case New Holland, another ag tech company. And Brian Ketcham, CFO since 2016. Lindsay has 11 million shares. The stock is 130, up today a little bit.
Yeah, we'll get
it's 1.4 billion equity cap.
Where's Brett?
They typically run with net cash. They've got about 70 million in net cash. And we're going to talk a little bit about what they do. So again, thank you guys for coming. Really appreciate you being here once again. So there's varying levels of familiarity with what you do in this room. For a city mouse like me, I'm much more familiar with the road zipper than the center pivot. Maybe you could talk a little bit about the history of the company, how those businesses ended up together, and what you actually do.
Thank you for having us and Lindsay Corporation. We've really started in business in 1955. Our founder and his 2 sons started kind of a blacksmith shop, and we built our first center pivot irrigation machine in 1969. That machine's still running here in Nebraska, just outside of Lindsay, where our factory is based, by the way. We began our international growth journey in the early 2000s. We bought or established businesses in Brazil, in South Africa, in France, in China. We added our largest international factory in Turkey in 2016. That really services that Mideast, North Africa region, Eastern and Central Asia. And that really completed our global footprint. We filled that out with commercial offices in Cairo and Rotterdam and Campinas, Brazil. And the infrastructure business, both the road zipper and the road safety assets, those really started as contract manufacturing businesses for us. And we had a founder there that wanted to exit, and we saw really good synergies. Both product lines we're bending, we're punching, we're galvanizing steel. We're seeing a technology overlay over top of both of those businesses that's been very, very convenient for us to deploy. We see a lot of good seasonality advantages as well. And this time of year, once the crops are planted, the center pivot business kind of slows down, and that's exactly when the road safety business kind of picks up. So we see good leverage through the facilities as well. And I think both businesses have that long-term secular growth trend around population growth. We want to make sure everybody gets fed. We want to address roadway congestion and keep people on the roadways safe. So we see some good long-term drivers for both of those businesses.
Great, thanks, and we'll talk about some of those. But starting with irrigation, so take us into the mind of the farmer. What drives the decision to irrigate a field, and what does that mean for your addressable market globally, because you are a global company?
Yeah, and this is really a 2-part answer, and I think it's really important to separate the mature market fundamentals, those mature markets like the US, like Brazil, like Western Europe, and the developing or project-oriented markets, because I think the market drivers are very different there. And if you look at the mature markets, it's really about yield and profit enhancement. And if you're a farmer and you bought your seed, you bought your fuel, you rented your land, at this point of the year, everything in that field is fixed cost. And your only ability to grow your profitability is to grow more crop. And certainly with irrigation, we know we can do that. And Nebraska is a really good example. If you look at the irrigated yield average in the state of Nebraska, it's just over 200 bushels an acre. The dryland or rain-fed irrigated average in the state of Nebraska is under 150 bushels. So you take 50 incremental bushels times the 140 acres that we'd irrigate in a standard field times $4.60 a bushel, you're going to return $32,000 per season in Nebraska because you irrigate. And in the Northern Hemisphere, where you generally have 1 crop, that payback period is between 2 and 3 seasons. If you transition to Brazil, where you're getting 2 or 3 crops, you can cut that payback time in a third. So we really see in those mature markets, those investments are really justified on that 2-3 year payback and really growing yield and maximizing the profit potential of every acre that they're farming. And the project-oriented or developing markets, they really could care less what the price of corn is. And those markets, it's really about food security. And this project-oriented market has always been there, but we really saw it start to get a lot more traction during COVID. And you can imagine being a net importer of food when the borders closed. And now you've lost the ability to feed your people. So a lot of governments really transitioned to agro investments to make sure they didn't have to rely on somebody else to feed their people. This got even worse with the Russia-Ukraine conflict. Egypt is another great example. They imported 85% plus of the wheat that they needed to make bread to feed their people from Russia or Ukraine. When that supply chain was at risk, it created a risk for the population and for the president there that they couldn't feed their people. So those investments, again, are really connected to GDP diversification in some cases, food security in all cases, just to make sure they don't have to rely on somebody else to help them feed their population. And those ones, again, it's not about the price of corn, the return on profitability. It's about I can feed my people or I can't. So those investments we see continuing to grow over time.
We're going to talk more about politics, don't worry. The politics, also policy, has some implications for your infrastructure business.
Yeah.
Can you talk about how that's a tailwind for the infrastructure business, what drives road zipper sales, and why you've adopted a lease model specifically in that product?
Yeah, so when you look at our infrastructure business, it's really, part of it is road safety products, which are generally crash cushions. That's about the road safety market globally is about a $3 billion market, where we participate as a very small subsection of that, but our products have IP associated with them and higher margins. And the other part of the business is Road Zipper, which is a highly differentiated product offering. We're the only company that really has that. So when you look at the market potential of
For those who don't know, maybe you could just explain what the Road Zipper actually is. We haven't seen it on action on a bridge.
Yeah, I think the best example, it's the most public example, is on the Golden Gate Bridge. And what we make the machine and the barrier that's all connected, and the machine will move the barrier 1 or 2 lanes. So it creates flexible roadways. It increases the capacity of an existing bridge is a good example. So the Golden Gate Bridge, there's 6 lanes in San Francisco. So in the mornings, there's 4 lanes coming into the city. Midday, Road Zipper operates and shifts and has 3 and 3. At the end of the day, there's 4 lanes exiting the city and 2 lanes coming in. So it really provides an opportunity to get more capacity out of existing infrastructure without having to build a bridge. So, I mean, that's a very unique offering. We're the only ones that do that. So we're the only ones creating the market. But when you think about the market size there, it's really any city globally that's got traffic congestion, or road construction, because that's where the leasing part of the business has come in the last few years, is using Road Zipper as an application during a road construction project to facilitate the overall project, accelerate the timing of the projects, and also provides for worker safety. And so both of those businesses, I would say, have been supportive by the additional IIJA funding in the U.S. It hasn't been the strong tailwind that everybody expected at first, because a lot of that additional federal funding has been eroded with inflation of construction project costs, but it's still, I would say, supportive of that business. And I would say we're probably middle innings of the IIJA funding, and we've got a few years yet ahead of us for that.
So technological innovation is not maybe the first thing that comes to mind when you think about sprinklers, but there is actually a lot of technology in what you do. Maybe you could talk a little bit about innovation and how it's driving both of your businesses, and how you're on a path to create stickier, more recurring revenue streams.
Yeah, the irony is that technology is probably the most exciting and interesting part of our business. And if you think about how our customers interact with the equipment in the old days, and center pivots are circles, so sitting in a ballroom like this, it just looks like a bunch of center pivots to me. And in the old days, if I had a pivot over there that I wanted to start, I'd have to drive way over there, drive into the field, open the box, and push start. I'd have to go back in the middle of the night to make sure it wasn't stuck or pouring water or chemicals in one spot, and then I'd have to drive over there and start that machine, and I'd really have a crew of people that would do this for me. And the technology allows me to do all of that from my cell phone, from my laptop. And some of our largest customers in the world have hundreds of machines, and they've got a handful of people that operate them for them. That technology allowed scale. It allowed farmers to grow at a much greater pace. They don't interact with machines anymore. They interact with their phones. And we started from day one really wanting to dominate that space. And we developed an internal team. Most of our engineering resources are dedicated to that technology space today, because we think it's a very important part of differentiation to attract and retain those customers. And we announced at the end of our fourth quarter last year, the growth rate on that technology, that annual recurring revenue, that software as a service, because we sell an annual subscription, was 28%. And that's something we're going to continue to comment on at the end of our fiscal years, but far outpacing the growth rates in the rest of the business. We also see a 97% renewal rate. So once farmers start with this technology, they don't give it back. And it's cycle proof. They don't give it back if corn drops 50 cents because they can't farm without it. They don't have the people. So this technology differentiation, in our view, is probably one of the stickiest pieces we have to attract and retain those customers for life.
Great. I promised we'd come back to politics. You had the fortitude, maybe, or the fortuitousness of reporting the day after Liberation Day, because you, as you mentioned, are an August year-end. I don't know if there's any update you can provide us on what you're seeing in terms of cost, sales, and how the global nature of your business is a natural offset to tariffs.
There's probably two ways to look at this, and Brian will maybe cover kind of the COGS situation, but I do think it is a case where our global footprint is really an advantage for us. That the bigger impact that's more uncertain, maybe more unknown, and some of this I know I heard earlier this morning, is really the impact on our customers and tariffs on grains. And corn is a great example. 16% of the corn use this year is supposed to get exported somewhere. And the 4 largest markets historically have been Canada, Mexico, China, and Japan. If you look at soybeans or soybean meal, it's 30 to 40% of that grain was supposed to be exported. And if we don't have access to those export markets, if the China market, for example, reroutes their supply chains to Argentina or Brazil or Paraguay, that grain might not have a home. And I think the USDA has already said if the trade issues impact American farmers, we're going to take care of them. I can tell you firsthand, American farmers don't want a handout. They don't want a subsidy. They want to compete on a global stage because they're the best farmers in the world. So the uncertainty now is what will happen with those exports. And will there be subsidy support? The farmers probably aren't going to know that until this fall. So they're going through the growing season now with just an uncertain cloud over the markets in the business. And currently the commodity markets have held on. We haven't seen any disruption, which is great news. And our hope and expectation would be that the American farmers can compete on the global stage because they're the best out there. And we really hope they get that opportunity. And Brian, maybe talk a little bit more about the internal story.
Yeah, I mean, so from a cost of goods sold standpoint, and it depends on where all the tariffs settle out. I think we said on our call mid-single digits, then the China tariff went up to 145%, so probably mid to upper single digit impact on our cost of goods sold. We've taken steps to mitigate some of that. One of the advantages of having the global footprint is we can shift supply around a little bit, but this is something that we had been planning for, so through inventories and arrangements with our suppliers, we're not expecting to see any impact until we get probably to the end of our fiscal year, which would be August 31st. But we've already initiated some pricing actions in this regard. And so our objective is that, and our expectation is that we'll be able to protect our margins. I mean, when you look at the ROI on an investment in center pivot irrigation, mid to upper single digit price increase doesn't really change the overall ROI. So I think we feel like we're in a good position to be able to protect our margins wherever the tariffs settle out.
Maybe you could just expand a little bit about the opportunity internationally, and specifically, Brazil, which is a growing market for you. Can that take up much of the slack that might be left by what's happening in the U.S.?
It could when we look at our business globally. I think, again, we're in a very advantageous position having that global footprint. And if some of the global markets move away from U.S. corn or soybeans and they start purchasing more in Brazil, again, Latin America, Argentina is a pretty big export market as well. That's going to be okay for our company because we manufacture pivots in Brazil. We ship out of that facility into the local market. So I think wherever that global demand goes, we're going to have a facility and an opportunity to fulfill that demand. So I think when I look macro at the company, we'll be able to be, we'll minimize the impact on the revenue line because we'll go where the market goes.
And then just a comment on your infrastructure business in terms of that global exposure.
I'm sorry, what's the question?
The non-U.S. exposure for the infrastructure business.
Not as significant on the infrastructure business.
Okay. One advantage you have as we go through this dynamic challenge is a net cash balance sheet, and you've had a very conservative balance sheet for a number of years. You started to deploy some of that cash in M&A, and you've been buying back stock a little bit more aggressively over the last several quarters. Just talk a little bit about your capital allocation philosophy.
Yeah. So our priority is really funding organic growth opportunities first of all, and we do see, over the mid to longer term opportunities there. I think the other area that we've deployed our capital over the last, we've announced a large capital expenditure program in our Lindsay, Nebraska facility. So productivity improvements in our plants would be another area where we would, consider a priority. And then moving on to M&A, I think really focusing on the technology, water space, and how we can leverage our existing capabilities in that area or drive market penetration of our technology products to really grow that recurring revenue.
So in November of 2020, you held an investor meeting, I think it was virtual at that time, where you set 5-year targets of 12% margins, 10% EPS growth. You look well on track to achieve those targets. What do you do for an encore?
Yeah, so we did the objective at that time, and we set the target in 2018 to get to 11 to 12% in what was considered the trough of the market at the time, and there was a number of initiatives that were part of that program, including some divestitures, and we did get to that goal by 2020, and I would say we've already seen the first encore. I think if you look over the last few years, we've been able to raise the operating margin above that, and we set a new target, and this is through the cycle of 14% or greater operating margin. And I think, again, really the 3 areas driving that primarily have been disciplined price management, some of the operational improvements that we've talked about, and then I think the growth of our international business and the improvements in the operations and capacity there has really lifted the international margins, which historically have been a little bit lower. So I would say the second encore is really this growth in recurring revenue and how that will drive accretive margins going forward.
Got it. I think we have some time for questions from our audience. Got one over here. Just if you could just state where you're from and your question.
Good morning, John Norwood from West Des Moines, Iowa.
Good morning.
Can you tell us a little bit about water use efficiency? It seems to me that's one of our key problems here in Nebraska as well with the Ogallala Aquifer. Ogallala, yeah. So how are you addressing water use efficiency?
Yeah, water use efficiency is another big part of the investment thesis for our customers and investors in the company. And if you think about how efficient our growers can be, they're conserving water, they're conserving energy. And if you look at center pivot irrigation, we're going to be between 95 and 98% efficient, which means 95 to 98% of the water we apply to a crop goes directly to yield enhancement and yield growth. Some of the older types of irrigation that we're now converting are flood irrigation. And a flood irrigated field is about as flat as this stage, and you put a big pipe on that end, you open the valve, and then you hope the water runs across the field and percolates. And that type of irrigation is in that 50 to 60% efficient. So the types of things that we're doing with nozzling, with design to optimize water use efficiency is a big part of the payback equation for our customers. There's also some digital impact, and if you think about the science of water management and how crops grow, we know through the agronomy of the seed that a corn seed needs a certain amount of water to sprout out of the ground, that it needs a certain amount of water to grow and develop a cob and put kernels on it. That agronomy is really tough, and if you haven't gone to school to study it, a lot of the farmers around the world don't apply the agronomy like they should to maximize water use efficiency, and we've put that science in their pocket. So we've got a tool called FieldNet Advisor, which is really an artificial intelligence tool that allows a farmer to wake up every morning, and if I've got 10 fields, I can look on my phone and see exactly which field needs water today and exactly how much water it needs today. So we're really working to create the capacity and the capability to use only as much as you need to generate yield, no more and no less. And in those studies, we do a side-by-side, and we take 2 fields right next door to each other, same crop, same planting date, And we challenge the customer, you irrigate this one just as you always have, do whatever you normally do, and let us apply the artificial intelligence to this field. And what we see, just at the bottom in terms of savings, is 17% reduction in water, 17% reduction in energy, and a 3% enhancement in yield, because the yield isn't always how much water you apply throughout the entire season, it's when you apply it, and making sure that crop never goes into stress. So giving our customers that capability, in our view, is a big differentiator, and that tool is just now going through kind of the early stages of launch and adoption, but we're very excited about how much water and energy we can save with a tool like that.
So water, obviously a very valuable commodity, increasingly scarce, a focus for those of us who invest sustainably, or sustainability-focused funds. Any particularly policy changes that you might flag that will incentivize farmers around the world to actually be more efficient in their use of water?
What we are seeing in a lot of global markets is a move towards more sustainable development, and this really started in the U.S. They have a program through the NRCS called the Environmental Quality Improvement Program, and it really funds efficiency gains to convert from flood irrigation to pivot irrigation, to upgrade sprinklers to be more efficient and use water. And we're starting to see those same types of programs in Western Europe. We certainly see them in Australia and New Zealand. So I think there really is an appetite at the federal level, regardless of where you are, to be responsible with water assets and make sure that we are only consuming as much water as we need to grow the maximum amount of crop. And that crop per drop is really the idiom in our industry, where we don't want to use any more than we need. And I think our customers are certainly in line with that, and they're getting a lot of support to make the investments to make it happen.
Any other elements from your story that you'd want to highlight as maybe misunderstood or things you'd want to clarify?
I think one of the big ones is really the technology story. And if you've ever been around a center pivot, it's just a big steel monster. It's pipe on wheels in the field. And when we look at the evolution and the technology I talked about a minute ago that allows customers to know exactly how much water they need, I think that's an underappreciated part of the story. And as that penetration grows and we start to see more and more of that very high margin annual recurring revenue, I think it becomes a more important part of the story. As a company having the global footprint, being able to kind of navigate the trade wars, being able to capitalize on growth wherever it exists in the world, I think is a key part of our story. And then water as a subset of agriculture. And I think a lot of times we're certainly going to be impacted by the ag cycles like Deere, like AGCO. I know they announced yesterday. But we've also got this water theme. So we're kind of water as a subset within the ag space. So if there's interest in a water company and more of a pure play water company that has some ag exposure, with that project opportunity that we talked about, and I think Brian mentioned a minute ago, we had our earnings, second quarter was an earnings record for us, even with the headwinds of the domestic U.S. market because of the project business that we're delivering in the MENA region. So I think that revenue diversity is also a key part of the story for us.
So doing well by doing good through the use of technology, I think that's a great place to leave it. And thank you again for joining us this year.
Appreciate you having us. Thank you.
Thank you.
We appreciate you having you. Thank you. On behalf of everybody from Gabelli.